Welcome back to Alpha Recap. I'm so glad you're with us. It's Allison here, and we've got a packed rundown from today's market tape. As always, if you have questions, you can reach us at stockalpha.ai. Today, we're unpacking NVIDIA's Big Volume Day, a regulatory and product win for Voltage Energy, and a partnership that could shake up energy trading across continents. Kate, thanks for joining. Ready to dive in?
Absolutely. Thanks, Allison. It was an eventful session, and there's a lot to talk through.
Okay, let's start with the headline. NVIDIA led the tape. The stock finished the day up about 2.5% to roughly $190, trading about 195 million shares. That was heavy volume. Walk me through why that mattered beyond just a nice pop in a big-name tech name.
Sure, when a single large company like NVIDIA trades at outsized volume, it acts like a liquidity magnet. Practically, that means it can move not only its own price, but also ripple into the chip sector, related exchange-traded funds, and derivatives. Heavy volume widens bid-ask spreads for some products and raises volatility, which creates both opportunities and risks for traders and portfolio managers.
So, the stock wasn't just doing its own thing, it was tugging on the rest of the market.
Exactly. And that showed up in leveraged instruments today. A 3x inverse semiconductor ETF fell about 3.5% to about $1.80 on a very large session of roughly 420 million shares. Those leveraged products amplify moves. So when a big cap like NVIDIA gains, the inverse products can move fast and create execution headaches or even short squeezes.
Yikes! Sounds risky for anyone who's not sizing positions carefully. What should traders watch next for NVIDIA?
The two practical items to watch are follow-through volume and price support. If the trade around $190 held with continued heavy volume, it can signal persistence. If volume receded, you could see more intraday whipsawing. Also keep an eye on short interest and flow data in semiconductor leveraged ETFs. They're the fast movers when volatility spikes.
Great. Let's pivot to energy and a name that actually had regulatory news. Voltage Energy. They released a combined update today, a preliminary International Trade Commission decision in their favor, and a product launch called Lynx Plus. Kate, for listeners who don't live in regulatory land, what does a preliminary ITC decision mean?
A preliminary ITC decision is a significant legal milestone. It doesn't conclude the whole case, but it removes a major near-term overhang. Practically, it reduces the risk that customers or partners would hesitate because of pending litigation. That matters a lot for small and mid-cap companies where a single legal cloud can stop deals from happening.
And they paired that with a product launch, Lynx Plus, which is a remote substation solution for solar projects. So they cleared a legal hurdle and then immediately pushed commercialization?
Yes, that's the two-pronged move. The regulatory relief reduces the legal drag, and Lynx Plus targets a real operational need on solar sites: remote control and monitoring of substations. If Voltage can convert interest into signed purchase orders or pilot projects, that's when you start seeing revenue. For investors, the key is whether the company turns the validation into commercial rollouts and measurable dollars.
So, the market liked the mix of less legal risk and potential near-term sales. What should we watch from Voltage in the coming days?
Watch for any announced pilot customers, signed purchase orders, or timeline updates on when the ITC final decision will arrive. A confirmed pilot or order would be the first clear monetization signal.
Switching gears, another big item today was a partnership between Trading Technologies and NMAC. They connected global execution tools with a European over-the-counter energy marketplace. That sounds dry, but people keep saying it could be a real industry changer. Why?
Because bilateral energy trading historically has a lot of friction. Manual steps, reconciliations, latency between hubs. Marrying robust execution tools with a pan-European OTC marketplace can lower operational costs, reduce errors, and potentially increase traded volumes. The other big point is cross-hub connectivity. If systems in Chicago and hubs like Munich and Essen can operate more seamlessly, you create a smoother market for big energy players and utilities to transact across regions.
So, big companies like Exxon and Chevron, or the big utilities, might take notice because trading gets cheaper and faster.
Exactly. The winners over time are often the tech platforms that capture network effects. More participants attract more counterparties, which raises fees and makes the platform sticky. But the commercial impact won't be instant. Product integration timelines, pilot customers, and performance metrics like latency will tell the story.
That makes sense. Let's talk clean tech and environmental stories that surfaced today. Voltage we covered, but there were a few other smaller names. Divarod completed a GNSS-R field project with OKI for landslide monitoring, and Renex's unit Zimmer equipment won a hauling contract in Florida. What's the through line here?
The common thread is commercialization. Divarod moved from lab to field validation, which is the crucial step to win municipal or utility contracts. Renex's hauling contract is operational validation. Logistics deals underpin recurring revenue for companies selling processed soils or compost. Together with Voltage's news, these items showed a shift from R&D to paid pilots or service contracts. Investors should want to see follow-up announcements that translate these wins into revenue figures.
And there was also OpSWAT in cybersecurity. They talked about making 2025 a landmark year. They didn't give financials, but they named threat prevention and partnerships as focus areas. How should listeners interpret that kind of messaging?
That kind of messaging is signals first. When a company talks about big expansion and partnership-led growth, it doesn't move the needle until we see partner names, contract values, or revenue contributions. What it does do is potentially accelerate procurement cycles among customers who are focused on critical infrastructure security, energy, transport, utilities. Keep an eye on any customer disclosures or revenue or annual recurring revenue figures tying those partnerships to the top line.
Got it. Okay, I want to touch on consumer and health product moves briefly. Ibrio launched a U.S. consumer brand called Breo. Living Proof launched a time-saving hair mist, and HealthPlans.ai named 2 executives. Why does that matter to markets?
These are commercialization pushes. For consumer brands, the key metrics are retail distribution, pricing, and sell-through. A launch is just the start. The revenue lift comes from sustained sales and favorable margins. For HealthPlans.ai, naming a CEO and a chief growth officer usually signals a push toward commercial partnerships and revenue acceleration. For investors, look for retail listings, pilot partnerships with payers, or early sales figures.
Rapid fire. A couple more quick notes from today. Divarod and Oki's landslide monitoring project supported the GNSS-R viability, Renex's hauling contract expanded operations in Florida, and Living Proof launched the new Style Refresh Mist. Anything else to call out here?
Just the pattern. Partnerships, pilots, and hires were dominant themes. That's often the pathway from prototype to recurring revenue, but the market needs to see dollar amounts and timelines to get excited.
Before we wrap, let's pull this into what traders and investors should watch tomorrow. Give me the short checklist. What should be on everyone's radar?
Quick checklist. 1. NVIDIA. Watch price action around $190 and whether volume persists. 2. Voltage Energy. Any updates on the ITC final decision timing and early commercial orders for Lianx Plus. 3. Trading Technologies and NMAC. Look for integration timelines and pilot customer names in Chicago, Munich, or Essen. 4. OpSWAT. Watch for partner or customer disclosures and any revenue metrics. 5. Semiconductor leveraged products. Watch whether heavy flows normalized or continued because those instruments can create short-term stress. And 6. Small cap follow-ups. Renex contract terms, Divarod commercialization plans, and Ibrio or Living Proof initial retail partners and sell-through data.
Perfect. Clear and actionable. Let's close with the top 3 takeaways you want listeners to remember from today.
Sure. Number 1, single stock liquidity matters. NVIDIA's heavy volume didn't just lift one name, it influenced leveraged instruments and sector dynamics. Number 2, commercialization is the day's theme. Multiple small and mid-cap firms moved from R&D into pilots or contracts, but investors need to see revenue and timelines to validate these stories. Number 3, partnerships and infrastructure moves are durable. The Trading Technologies and NMAC tie-up is a reminder that platform consolidation in markets and energy trading can produce long-term winners if integration and client adoption follow through.
Love that. That wraps us up for today. Markets closed mixed, with NVIDIA leading gains and a batch of commercialization and partnership stories that could pay off over time. Thanks so much, Kate, for the clear breakdown and for translating all of this into something we can act on.
Thanks, Allison. Always a pleasure. If listeners want more detail on any of these themes, I'm happy to dig into flow data or deal timelines.
All right, listeners. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. That's stockalpha.ai. Send us what you want us to break down next. Until next time, I'm Allison, and you've been listening to Alpha Recap.